So what sort of sentiment shift are we seeing in the IPO market in Europe then?
We're certainly seeing European firms rushing back to the market to list. Part of this has to do with the subdued market volatility that, of course, makes a more attractive environment to price. But with that, we're having bankers rushing these firms into the market, hoping they can capture this calm if the market, for some reason, does begin to swing again. So that means a company like JDE Peet's, they had their IPO process. The turnaround was just 10 days. Usually the average is 4 weeks. This is the quickest IPO for a listing of its size. Again, bankers really rushing, getting a lot of meetings done with investors, hoping to drum up interest, but the interest is here. There is demand for these IPOs, which are the largest figure of listings since 2018. That's because investors are desperate for companies that seem like they can survive the coronavirus pandemic's impact. So that means the book building process has been shortened, but still they can get more people to it. That's part of the reason why Peet's was able to speed up their listing. That continues after the IPOs have priced. You can see here the most recent IPOs over the past year have beaten the benchmark year to date.
And Dani, it's not just equity sales that are heating up. Corporate bond sales also smashing records in the US. What's the latest?
Yeah, the figure $1 trillion raised in the investment grade bond market. This is smashing basically every record we've seen. This is double the pace of 2019. Part of this borrowing binge is because of the Fed. And look, this is what the Fed was hoping to achieve when they said that they would support companies that were going to be impacted by the coronavirus. Now, so far, they haven't gone and bought individual bonds. They're just supporting through the ETF market. But as soon as a central bank made their intentions clear, that opened up the floodgates. And we see this intense rush to raise cash through the bond market. And that need for cash is really apparent. We've seen this May the highest number of bankruptcies in the U.S. in any other month since the financial crisis. So they need that cash. At the same time, investors are buying them up as yields continue to chart higher. Now, this, of course, brings with it risks. Yep. It means there's more leverage, but leverage was already high in corporate America, so that's just increasing. Now, there is likely to be a reprieve of the bond sales in the second half of the year, according to many strategists, and that's especially true if we get an economic turnaround in the second half of 2020, Nara.